Yale economist Robert Shiller warns of an impending housing market downturn, suggesting that you may want to consider delaying your home purchase because home prices are very, very high by historical standard. In today's video, we're going to unpack this article that we found on Zero Hedge, and we're going to try to figure out what that means for the potential home buyer or home seller in this market. In addition to that, we're going to take a look at the housing markets that got hit the hardest. According to the Case-Shiller Index, home prices have fallen for the 7th straight month. They are down 0.42% month over month. That is leaving the home price index up 2.5% year on year. Now, this is all stats that are coming from January, so you need to keep in mind that this is backwards looking data. And of course, the market back in January is significantly different than what we're dealing with here today as we go into April. Now, the article goes on to say that one of the most interesting aspects of January's report is the continued weakness that we're seeing in home prices here on the West Coast. Specifically, markets like Seattle, San Francisco, and San Jose are getting hit the hardest, and they're leading the charge on year-over-year price declines. And there's a few reasons that this is happening, but first and foremost is that these are major tech hubs, and the tech industry as a whole has seen thousands of layoffs over the last 6 months. In addition to that, median home prices in these areas have become significantly detached from the local wages. And for those home buyers potentially using financing to secure the purchase of their home, the increase over the last 12 months that we've seen in mortgage rates has amplified this. Now, we're going to come back and touch on this map here in just a second, but I want to go ahead and bring up this chart because it's the Case-Shiller National and Composite Index, and it's a reflection of where home prices have been since 1987. Composite 20 is going to be the 20 major metros across the United States. This is down 0.4% month on month, and it's down 4.7% from the peak. Then if you look at the orange line here, this is national home prices, and this is going to be down 0.2% on the month, but 3% from the peak that we saw in June of 2022. These are home prices in nominal terms, so they have not been adjusted for inflation, but for all intents and purposes, if we were to adjust these for inflation, these would still be higher prices than we saw back in the peak leading up to the great financial crisis in 2006. And so if we look at some key metrics like price to income ratios, rent to value, or debt to income ratios, the market as a whole is certainly what we would consider expensive right now. So if you're a potential home buyer and you were wanting to speculate on home prices, just understand that there is some major headwinds and risk that's sitting in the market. But that's not to say that every single market is different. We're just looking at everything from a national level. As we go back to this chart, I wanted to point out a few key trends that I see potentially unfolding as we go into the summer months here. First and foremost is that these markets on the West Coast are likely to see larger year-on-year declines because the peak of the housing market was in the summer of 2022. So some of the markets here in yellow that either remain flat or they're down slightly year-on-year, markets like Los Angeles, San Diego, Phoenix, and Las Vegas, these are likely going to move into red territory as we go into the summer months. And you may even start to see some of these markets in light green start turning yellow where they're either flat or have slightly negative year-on-year growth. But as it stands now, the markets that are holding up the best are going to be the markets here in the Southeast. Markets like Florida, Miami, and Orlando, they're still showing 9 to 12% year-on-year price growth. And a lot of this could be attributed to some of the migration trends that we saw unfold over the last few years due to the pandemic. Now let's go ahead and take a look at all of the markets that got hit the hardest. We have San Francisco coming in at the top spot. We're down 1.3% month on month. This is down about 8% year on year, but if you go from the peak, we're actually down 17% already. Seattle is down 16% from its peak. San Diego is down 11% from the peak. And you even have Phoenix and Las Vegas about down 10%. Now, this chart also reveals that there still has been some price softening here in the Midwest and the Southeast. You have markets like Tampa down about 5% from the peak. Miami's down about 2.5%. And then you even have markets like Cleveland and Chicago down about 4% from the peak. Now, Robert Shiller goes on to say that it might get a little cheaper after the next 6 months. And they suspect that some of these home price declines that we're starting to see is what Jerome Powell of the Federal Reserve is hoping for. And judging by where the 30-year fixed mortgage rate is today at about 6.5%, they suspect that prices have a long way to fall from where they are today. The real question is should we buy now or should we wait? And of course, the answer to that would be it really depends on your personal situation and your current market. It's just important to understand where the headwinds are and what kind of challenges the housing market is facing. So I think some of the most important things to consider is, what does a good deal look like in your market? And are you able to find a motivated seller? Because there's good deals to be made in every single market. And if you're setting yourself up properly, you have a good emergency fund, you're purchasing with a long-term time horizon in mind, you secure good fixed rate debt. And then I would even go one step further and look at your property through the lens of an investor and consider, even if you don't plan to turn that home into a rental, what would the rental rates be for that property today? And if you can generate enough rental income to service the operating costs of that property and it would cash flow day one, then it may very well be a good long-term investment. At the end of the day, even though there are some challenges that are facing the housing market, personal finance is personal. So you just want to make sure that you are setting yourself up properly, putting yourself in a really good position so that you can become a successful homeowner and weather any sort of short-term market turmoil that we may see unfold over the next several months. And that is going to wrap up the video today. If you found it useful, please consider hitting that like button and subscribing to the channel for more weekly content just like this. And we will see you on the next video. Thank you so much. Take care.